Hey everyone, welcome back. Today we're going to do a deep dive on something pretty interesting.
Yeah.
Um, and that's the recent dip we saw in gold prices after the election.
Hmm.
We'll be looking at an article from the Jerusalem Post that summarizes some expert opinions on this,
Okay.
including some insights from Goldman Sachs.
Interesting.
So what we want to figure out is, should you be worried about this dip,
Right.
or is this a chance to buy?
Yeah, I think a lot of people are asking themselves that right now.
I think so too.
It is interesting to see gold, which is typically seen as a safe haven, dip
Hmm.
right after a big political event like this.
Yeah.
Usually uncertainty makes investors kind of run to gold, right?
Right.
But we didn't see that this time, at least not right away.
Exactly. So that's what we're trying to figure out what's going on.
Yeah.
So the article highlights a 6% drop in gold prices in the weeks following the election.
Okay.
What are some of the reasons for this?
Well, the article actually outlines three potential reasons.
Oh.
First, you have just general investor uncertainty.
Regardless of how they felt about the election results.
Exactly. I mean, big changes, even if they're potentially positive ones, can make people hesitate.
So even if it's like the outcome you wanted, you're still a little unsure what's going to come next.
Precisely.
Okay.
The second reason has to do with President-elect Trump's policies.
Okay.
Some analysts are concerned about his proposed tax cuts and spending plans,
Uh-huh.
and how that might affect the U.S. debt burden.
Okay, but how does increased debt affect gold prices? That seems counterintuitive.
It all boils down to bond yields.
Okay.
You see, when that U.S. debt grows, it can actually lead to higher bond yields and a stronger dollar.
Uh-huh.
And both of those historically put downward pressure on gold prices.
Okay.
So bond yields basically represent the return an investor gets for lending money to the government.
Okay.
So as those yields rise, investors might decide to shift away from gold and into bonds.
To capture those higher returns.
Exactly.
So it's almost like some investors believe that a strong U.S. economy, at least in the short term,
Right.
might actually hurt gold.
Yeah, that's one way to look at it.
Okay.
And then the third reason the article mentions really connects to that possibility of a strong U.S. economy.
Okay.
So there's been this speculation that deregulation under a new administration could lead to a stock market surge.
Oh, interesting.
So if investors are feeling optimistic about stocks,
Yeah.
they might move away from safe haven assets like gold.
And into those stocks with potentially higher growth.
Exactly.
So it's almost like choosing between, a really steady, reliable friend
Okay.
and then this new exciting prospect that might offer you bigger rewards,
Yeah.
but it comes with more risk.
Yeah, that's a good analogy.
So we've got this initial dip in gold prices, fueled by uncertainty, potential economic shifts, this possible stock market rally.
Right.
But then we have Goldman Sachs
Yeah.
coming in with a totally different perspective.
Yeah, this is where things get really interesting, I think.
Right.
They're not just brushing off this dip. They're incredibly bullish on gold.
Wow.
And remember, this is Goldman Sachs.
The second largest investment bank in the world.
Exactly. They're predicting that gold will hit $3,150 per ounce by the end of 2025.
So they're basically telling everyone to go for gold.
Yeah, pretty much.
That prediction seems to completely contradict this recent dip.
It does.
What makes them so confident in this long-term outlook?
Well, they've identified what they call structural and cyclical drivers for gold's future growth.
Okay.
Structurally, they point to continued demand from central banks worldwide.
Okay.
Gold is still viewed as a critical reserve asset.
Especially during times of global uncertainty.
Exactly. Which, let's face it, we've got plenty of right now.
We do.
Geopolitical risks are still a huge factor driving demand.
Okay.
And then on the cyclical side, they highlight investors' desire to hedge against potential rate cuts by the Federal Reserve.
So if interest rates go down, gold becomes more attractive because it doesn't yield interest. But it tends to hold its value, unlike a currency that might be losing purchasing power due to those lower rates.
Exactly.
Okay.
And they're also factoring in concerns about, the stability of the labor market.
Uh-huh.
So if the job market weakens, gold often becomes more appealing.
As a safe haven asset.
Exactly.
So even with this dip, Goldman Sachs believes the fundamentals supporting gold are strong,
Yeah,
and they're predicting a major upswing.
they are.
What else are they looking at that makes them so bullish?
They point to a few additional catalysts.
Okay.
And you remember how some analysts were worried about President-elect Trump's policies increasing the U.S. debt burden?
Yeah.
Well, Goldman Sachs sees this as a positive for gold.
Really? How could growing U.S. debt actually be good for gold?
They argue that soaring U.S. indebtedness, which, as the article mentions, hit the third highest annual budget deficit in history this year,
Wow.
could actually make gold more attractive as a safe haven.
Hmm.
And they also think that the Fed might end up lowering interest rates, further increasing the appeal of gold.
So it's almost like they're looking at the same factors that others view as negatives and interpreting them as positives for gold.
Exactly. It's all about perspective.
And how you interpret those factors.
Exactly.
Interesting.
And, Goldman Sachs isn't alone in this view.
Okay.
The article also quotes Matthew Jones of Solomon Global,
Uh-huh.
and he shares a similar bullish perspective,
Okay.
especially focusing on the potential impact of tariffs,
Right.
which was obviously a big topic during the election.
Right.
What's his take on how tariffs could affect gold? Well, he believes that tariffs can create economic uncertainty
Okay.
and that can drive investors towards gold.
That makes sense. When things feel unsteady, people tend to gravitate towards something stable.
Exactly. And he adds that tariffs can also trigger inflation,
Uh-huh.
which can make gold even more attractive.
Especially in a scenario where central banks are actually lowering rates
Exactly. So if your currency's value is decreasing,
because of inflation.
yes, then you want an asset that will hold its value.
So gold acts like a shield against your money losing its worth.
Precisely. And Jones actually goes even further to suggest that tariffs could weaken the dollar.
Okay. Can you explain that? That seems counterintuitive.
Sure. He argues that trade restrictions and disruptions to global supply chains,
Which tariffs can cause.
right, all of that can lead to a decrease in demand for the dollar.
Okay.
And a weaker dollar then makes gold more affordable for international buyers
Which could potentially drive up demand.
and push up prices.
So it's this intricate dance between global economics and investor behavior.
It really is. And the article also mentions gold IRAs as a potential option for individuals looking at gold investments.
Before I move on, I think it's really important to emphasize that, this deep dive is just for informational purposes only.
Yes, definitely.
We're exploring all these different perspectives on gold,
Right.
but anyone considering actually investing in gold should really consult with a professional financial advisor. They can provide you with tailored guidance based on your own specific financial situation and your goals.
I completely agree.
Okay, so with that said, let's dive a little deeper into some of these factors influencing gold prices, starting with those psychological factors we touched on earlier.
Okay, sounds good. The article suggests a couple of interesting psychological factors might be at play here.
Okay,
Like we talked about how uncertainty can drive gold prices up.
right.
Well, sometimes resolving that uncertainty, even in a positive way, can cause a short-term dip.
So it's like buy the rumor, sell the news.
Exactly.
So investors were buying gold, in anticipation of all the election uncertainty.
Yeah.
And then when the results came in, even if they were happy with the outcome,
Yeah.
they sold off some of their holdings.
Yeah, it's a common market pattern.
Interesting.
And then the second psychological factor has to do with that potential stock market rally we talked about.
Okay.
If investors believe that, the new administration is going to bring economic growth and deregulation,
Yeah.
they might be more inclined to go towards stocks for higher growth potential.
Compared to gold.
Exactly.
So it's about choosing between that slow and steady asset, like gold,
Right.
and then that potentially faster but riskier asset like stocks.
Yeah, that's a good way to think about it.
It doesn't mean gold is a bad investment.
No, not at all.
But it just means that in certain market conditions, investors might prioritize other assets.
Exactly.
Right. It all comes down to, understanding your investment goals, your risk tolerance,
Uh-huh.
and how different assets fit into your overall portfolio.
Exactly.
Speaking of portfolio strategy, the article does mention gold IRAs as a potential avenue for investing in gold.
Yes, they do.
So,
And before we go any further, I
Yeah.
just want to reiterate that this deep dive is purely for informational purposes.
right, of course,
We're exploring ideas here, not giving out financial advice.
for sure.
So if you are considering any gold investments, it's essential that you talk to a qualified financial advisor.
Yeah, they can help you assess your individual situation and guide you towards the best decisions for your own financial goals.
Absolutely.
Okay, good point. So let's go back to those tariffs
Sorry.
and how they could affect the gold market.
Sure.
It seems like there are so many potential ripple effects.
Now, the impact on gold can be pretty complex.
Yeah.
So let's unpack Matthew Jones's argument
Okay, I'm ready to unpack it.
about tariffs potentially triggering inflation.
Okay.
So when tariffs are imposed on imported goods,
Mm-hmm.
those goods become more expensive for consumers,
Yeah.
potentially leading to a general price increase.
Which is inflation.
Exactly. And gold has traditionally been seen as a hedge against inflation.
Because it tends to hold its value when currencies are losing purchasing power?
Precisely.
Okay.
So if tariffs lead to inflation,
Yeah.
we might see even higher demand for gold.
As investors try to protect their wealth.
Exactly.
But didn't we also say that a strong dollar is generally bad for gold?
We did.
So wouldn't tariffs, at least in theory, make American goods more competitive? Potentially strengthening the dollar.
That's a great point.
Seems a little contradictory.
Yeah, and it really highlights that complex relationship between all these economic factors.
Right.
So a stronger dollar usually puts downward pressure on gold prices because it makes gold more expensive for international buyers.
Right.
But the relationship between tariffs and the dollar,
Yeah.
it's not always that straightforward.
So it's not just a simple equation of tariffs equal stronger dollar or tariffs equal weaker dollar.
Exactly. The impact really depends on a lot of different factors,
Heck what?
like the specific tariffs themselves,
Uh-huh.
how other countries respond,
Okay.
and then just the overall health of the global economy.
So there's a lot of uncertainty.
There is.
What's the key takeaway for gold investors then when it comes to tariffs?
I think the main takeaway is that tariffs can create volatility and uncertainty in the market,
Okay.
which is something that gold investors really need to watch closely.
Right. Staying informed, doing your research, and considering multiple perspectives before making any investment decisions.
Absolutely. This whole deep dive is about giving you that framework to understand these complex issues.
Right.
So you can continue your own exploration with more confidence.
Yeah, I like that we're giving you the tools to navigate the gold market's uncharted territory.
Exactly.
Okay, so now what about this increased central bank demand for gold that we hear so much about?
So central banks hold gold as part of their foreign exchange reserves.
Okay.
It helps to diversify their holdings
Uh-huh.
and provide some stability to their currencies.
So it's kind of like a backup plan in case other currencies become unstable?
Yes, precisely. And we've seen a significant increase in central bank gold purchases in recent years.
Really?
Yeah, partly driven by all this geopolitical uncertainty.
Oh.
Countries are looking to reduce their dependence on the U.S. dollar and other major currencies.
So it's a hedge against the potential decline of the dollar as the world's dominant reserve currency.
Yes, and it really reflects gold's enduring appeal as a safe haven asset.
Even with, digital currencies and all these complex financial instruments,
Right.
gold still holds a unique place in the global monetary system.
It does. It's like this ancient relic that's still relevant in our modern world.
It really is.
It's fascinating.
It is, and it definitely seems to spark a lot of debate, as we've seen, just in this deep dive. We have analysts predicting a major upswing, others expressing caution, and this whole range of factors affecting its price.
Yeah, from global economics to investor psychology.
Exactly.
It's a lot to consider.
It is.
So approaching the gold market with a critical eye, considering all these different perspectives, and then making informed decisions based on your own individual situation.
That's so important.
This isn't a one-size-fits-all market.
You need to do your research, understand the risks and rewards, and really choose investments that align with your financial goals.
I couldn't agree more.
Okay, so speaking of risks, let's shift our focus now to another major driver of gold demand: geopolitical risk.
Okay, so geopolitical tensions,
Yeah.
things like wars, political instability, global power struggles, all of that can really impact the gold market.
Yeah.
When the world feels unstable, investors often turn to gold for safety.
It's like that saying, when cannons roar, gold prices soar.
Exactly. And in recent years, we've seen plenty of geopolitical events that have really shaken things up.
Oh, yeah. I mean, the conflict in Ukraine, tensions between the U.S. and China, rising populism and nationalism, it's a lot.
It is. And all of that unease often translates into increased demand for gold.
As investors try to protect their wealth from the potential fallout of these geopolitical risks,
Exactly. So it's more than just fear. It's strategic diversification.
it's recognizing that gold has historically held its value or even increased in value during times of global turmoil.
Precisely. It's a way to hedge against the unknown, to preserve your purchasing power in the face of potential economic or political upheaval.
So the article mentions the conflict in Ukraine. How did that event influence gold prices?
Well, when the conflict first began, we saw a pretty sharp spike in gold prices.
Okay.
Investors were seeking refuge in this safe haven asset as uncertainty and fear really gripped the market.
Yeah.
The potential for wider geopolitical instability disruptions to global supply chains,
Yeah.
sanctions imposed on Russia,
Yay.
all of that contributed to this surge in gold demand.
It's like a domino effect.
It is.
One event triggers this cascade of economic and political consequences.
Right.
And gold becomes this cushion protecting investors from the fallout.
Exactly. And, the impact of geopolitical risks, it can linger.
Even after that initial shock.
Even after the initial shock,
Yeah.
the uncertainty and the potential for escalation
Yeah.
can keep those gold prices elevated.
So it's not just about that immediate crisis, but also about the long-term implications.
That's right. And that's why geopolitical risks are such a critical factor to consider when you're analyzing the gold market.
Okay.
They're unpredictable.
Mm.
They can be volatile, but they can also create opportunities for investors who understand how to navigate this complex landscape.
So it's not just about, buying gold when there's a major crisis.
Right.
But it's about understanding how these geopolitical tensions can influence long-term trends.
Exactly. It's about having a strategic approach, understanding history, and being willing to adapt.
And that brings us back to staying informed, doing your research, and seeking expert advice.
Definitely the gold market is not for the faint of heart.
Right.
But for those who are willing to put in the work,
Uh-huh.
it can offer both protection and the potential for profit.
It's like a treasure hunt.
Yeah.
But instead of digging for gold in the ground,
Uh-huh.
we're digging for knowledge and insights in finance and geopolitics.
I love that analogy, and the rewards could be just as valuable.
So we've talked about geopolitical risks, but let's not forget about another major source of uncertainty.
Okay.
The global economy.
Right.
I mean, we have inflation, rising interest rates, supply chain problems, the lingering effects of the pandemic. How are all of those things impacting the gold market?
Well, it really highlights gold's appeal as a hedge against economic turmoil.
Okay.
When economies struggle, currencies can weaken, stock markets can drop,
Right.
and investors often look for safety in assets like gold.
When the going gets tough, the tough buy gold.
Exactly. And in the current global economic climate, there's plenty for investors to be concerned about.
There is.
Inflation is eating away at the purchasing power of currencies.
Yeah.
Interest rate hikes are making borrowing more expensive.
Right.
Supply chain disruptions are creating shortages and driving up prices.
So it's like this perfect storm of economic challenges.
It is.
And gold is a beacon of stability.
Exactly.
Mm.
And, gold doesn't just protect against inflation.
Mm.
It can also act as a hedge against deflation.
Wait, deflation, isn't that a good thing? Prices going down?
Well, deflation can be a good thing, but it can also signal a weakening economy, lack of demand,
Right.
and a downward spiral in prices.
Okay.
So in a deflationary environment, gold can hold its value better than currencies that are losing purchasing power.
So gold can protect against both rising and falling prices.
Yes, making it a valuable asset in uncertain economic times.
Wow. So it's not just about fear and greed. It's about, smart planning,
Right.
recognizing the importance of diversifying your investments,
Absolutely.
building a portfolio that can weather those economic storms.
That's exactly right. And that's why we're seeing continued demand for gold from individual investors and central banks.
Makes sense.
They're recognizing that gold is more than just a shiny metal.
Yeah.
It's a strategic asset that can provide stability and security in a really volatile world.
So it's like a reflection of the world, showing our fears, our hopes, and our constant search for security.
I like that it reminds us that even in these complex financial markets, human emotions and fundamental values still really matter.
We've covered a lot in this deep dive, the post-election gold dips,
yeah.
Goldman Sachs' bullish outlook, the impact of geopolitical risks, the role of central banks, the overall global economic context.
It's a lot.
It is. But before we wrap up, I want to go back to investor psychology for a second.
Okay.
We've touched on it throughout our conversation, but I think it deserves a little more attention.
I agree. Investor psychology is a critical and often overlooked part of the gold market.
Right. It's not just about rational analysis and economic data.
Mm-hmm.
It's also about fear, greed, uncertainty, and that herd mentality that can really drive market swings.
Exactly. It's like that saying, the market can stay irrational longer than you can stay solvent.
I've heard that one.
Yeah, and we see those psychological factors playing out in really dramatic ways with gold.
Like how?
Well, for example, during a major geopolitical crisis,
Okay.
investors might rush to buy gold, pushing up prices,
Uh-huh.
even if the underlying economic fundamentals don't really justify that surge.
So it becomes a self-fulfilling prophecy.
Right.
That fear of missing out, the herd mentality, and that perception of gold as the ultimate safe haven can create a buying frenzy.
Yeah, and push those prices beyond reasonable levels.
And then on the flip side, when market sentiment changes,
Mm-hmm.
that fear fades, investors see other assets as more attractive,
Right.
then we can see significant drops in gold prices.
Exactly.
So it's this constant push and pull between rational analysis and emotional reactions,
Yes,
between fundamental value and market perception.
precisely.
That's why it's so important for investors to be aware of these psychological factors, understand their own biases
Yeah.
and make decisions based on a balanced assessment of the risks and the rewards.
I completely agree. Don't get caught up in the hype.
Right.
Don't panic when prices change. And don't let your emotions control your investment strategy.
Absolutely. Success in the gold market, like any
Uh-huh.
market, really comes down to staying informed, staying disciplined,
Yeah.
and focused on your long-term goals.
Couldn't have said it better myself.
Okay, so we've discussed, the emotional and the rational aspects of the gold market.
Yeah.
But what about the practical side? What are some key things that someone should consider if they're thinking about investing in gold?
That's a great question.
Yeah.
Let's talk about how you actually buy and hold gold,
Okay.
because there are several different ways to invest.
Yeah, break it down for me. What are the options?
Sure. So the most traditional way is to buy physical gold,
Like coins or bars?
exactly like the treasure you see in pirate movies.
Yeah.
There's something very appealing about holding physical gold.
Yeah, I can see that.
It's a real asset, it's portable, it's been a store of value for centuries.
But there must be some downsides to holding physical gold, right?
There are.
Like, where do you keep it safe?
Yeah, that's a major consideration.
Yeah.
Security is a big concern.
Right.
You need a safe and secure place to store it.
Whether it's a home safe, a bank safety deposit box.
Right, or maybe a specialized vaulting service.
Okay.
And of course, storing and insuring physical gold comes with costs.
And you have to worry about theft or damage or loss, too.
Exactly.
Well-
It's not as simple as just buying a gold coin and hiding it away. You need to think carefully about the logistics
Okay.
and also be aware that you'll often pay a premium over the spot price for physical gold.
What's a premium?
It's basically the extra cost you pay for the convenience of owning physical gold.
Okay.
Dealers and retailers need to cover their expenses, like manufacturing, shipping, storage.
What?
And those costs get passed on to the buyer in the form of a premium.
So you pay a little extra for the privilege of holding that gold coin in your hand.
Exactly. And the premium can vary depending on the type of gold, the dealer, and the market conditions.
So physical gold has its pros and cons.
It does.
What are some other ways that someone can invest in gold?
Another popular option is investing in gold ETFs.
ETFs. I've heard of those, but I'm not really sure how they work.
So gold ETFs are exchange-traded funds,
Okay.
and they're basically investment funds that track the price of gold.
Okay.
So they hold physical gold bullion in a secure vault,
Uh-huh.
and then they issue shares that represent ownership in the fund.
So you're not buying physical gold, but you're buying shares that reflect the gold price.
Exactly.
Mm.
And the advantage of gold ETFs is that they're very liquid,
Meaning?
meaning you can easily buy and sell them on stock exchanges,
Okay.
just like any other stock.
That's certainly easier than trying to find a gold dealer or worrying about storing physical gold.
It is, and they usually have lower premiums than physical gold.
So you're not paying as much extra for the convenience.
Right, but you're not actually holding the physical gold either.
Right, you're relying on the fund manager to hold the gold securely
Yes,
and accurately track the price.
exactly. So you need to trust the fund manager.
Right. Do your research. Choose a reputable ETF provider with a solid track record.
Absolutely.
Okay, so we have physical gold, we have gold ETFs. Any other options?
You can also invest in gold mining stocks.
Oh, so you're buying shares in the companies that actually mine the gold?
Exactly. And the advantage of mining stocks is that they can offer leverage.
Okay.
So if the gold price goes up, mining company profits can increase significantly,
Okay.
and their stock prices may rise even more than the gold price itself.
So there's potential for greater gains?
There is. But you also have to remember that mining stocks are riskier than physical gold or gold ETFs.
Oh, yeah.
They're subject to the same market fluctuations as any other stock.
Right.
And they're also influenced by factors that are specific to the mining industry,
Like what?
like operating costs, exploration, success, geopolitical risks in the areas where they operate.
So it's a higher risk, higher reward scenario?
Exactly. It's not for every investor.
Okay.
You need a high tolerance for risk and a good understanding of the mining industry.
So we've got physical gold, gold ETFs, mining stocks. Are there any other ways to invest in gold?
There are also gold futures contracts.
Those sound complicated.
They can be. So gold futures contracts are basically agreements to buy or sell a specific amount of gold
Okay.
at a set price
Uh-huh.
on a future date.
So it's like making a bet on the future price of gold
You could say that futures contracts are often used by, people like mining companies or jewelry makers
Okay.
to protect themselves against price fluctuations.
Right.
But they can also be used by speculators who are trying to profit from price changes.
So it's a high risk, a high reward game for sophisticated investors.
Exactly. And most individual investors probably shouldn't get involved with futures contracts.
Okay.
They're complex, and there's a high risk of significant losses.
It seems like there are so many ways to invest in gold,
There are.
ranging from simple and tangible to complex and speculative.
It really runs the gamut.
It does, but before we wrap up, I want to revisit the importance of those professional financial advisors.
Yes.
Why is it so crucial to seek expert guidance when you're considering investing in gold?
I can't emphasize this enough.
Yeah.
Gold is a unique asset. The market is complex,
Right.
and it's not for everyone.
Yeah.
So a qualified financial advisor can really help you assess your own individual circumstances, your goals, your risk tolerance, to determine if gold is even right for you.
Right. They can help you navigate the different investment options,
Totally.
understand the potential risks and rewards, and create a strategy that actually fits your financial plan.
That's right. They can also help you avoid common mistakes,
Why?
like buying when the price is high, selling when it's low,
Oh, yeah.
getting caught up in those speculative bubbles, or even falling prey to scams.
It's not just about picking the right investment.
No.
It's about having a trusted advisor to guide you, answer your questions, and help you make those informed decisions.
Absolutely. And remember, this whole deep dive is designed to empower you with knowledge,
Right.
but it's not a replacement for that personalized financial advice.
We're sparking your curiosity about the gold market,
Yes.
but ultimately making those investment decisions is up to you and your financial advisor.
Exactly. With that in mind, I think it's time to wrap up this deep dive into the gold market.
And we encourage you to continue exploring this topic on your own.
Yeah, absolutely, do your own research.
Don't just take our word for it.
Or even Goldman Sachs's word, for that matter.
Exactly. We've provided a framework for understanding the gold market, but there's always more to learn.
You can read that full Jerusalem Post article we discussed and explore the sources they cite.
Doing your own research is so important.
It really is. And remember, you're not alone in this.
If you're thinking about making any investment decisions, especially involving something as unique as gold,
Right.
talk to a qualified financial advisor.
Yes. They can give you personalized guidance based on your specific circumstances and goals.
Okay, so this deep dive has been all about giving you a deeper understanding of the gold market, its history, the factors that influence its price, and the different ways that you can invest.
Exactly.
We talked about the risks and the rewards,
Right.
the rational and emotional aspects of the gold market, and the importance of staying informed and seeking expert advice.
Absolutely.
But when it comes to your own financial decisions, professional advice is essential. So knowledge is power.
It is. And the more you know about gold, the better equipped you'll be to make informed decisions about your financial future.
We hope you enjoyed this deep dive into the world of gold.
Yeah, it's such a fascinating market.
It is.
Full of history, intrigue, and of course, potential.
We'll be back soon with another deep dive into a new topic.
Until then, keep learning, keep exploring.
And as always, thanks for listening.